Hi. Let's learn about credit bureaus. A credit bureau, also known as a credit reporting agency in the U.S., is an organization that collects and researches individual credit information and sells it to creditors, such as banks and credit card issuers, so they can make decisions about granting loans. It is like a library for your financial history that lending institutions use to determine your creditworthiness. Credit bureaus partner with various lending institutions and credit issuers to help them make decisions about extending credit. They do not decide whether or not an individual should have credit extended to them. Instead, they gather and provide information about an individual's credit score to lending institutions, giving them a clearer picture of an individual's credit history. Both individual consumers and lending institutions rely on the services provided by credit bureaus. Credit bureaus gather information from various data providers, such as creditors, debt collection agencies, public records, and even sources like payment history on cell phone bills and rent. This information is then used to calculate a person's credit score. FICO scores, the most common credit scores in the U.S., are created by the Fair Isaac Corporation and are used by credit issuers to make informed decisions. A higher credit score typically translates to a lower interest rate on a loan. There are other credit scores as well, with VantageScore being a notable example. It's important to note that different lenders may use different scoring models and thus may see variations in your score. In the U.S., Equifax, Experian, and TransUnion are the three major credit bureaus. They not only provide credit scores but have also combined to create their own credit score, VantageScore, to complement the commonly used FICO score. It is important to note that different credit bureaus might provide different scores because they may have access to different information. These scores are crucial factors in determining credit approval and interest rates for borrowers. Credit bureaus are regulated by the Fair Credit Reporting Act, passed in 1970, to protect consumers from negligent or deliberately fraudulent information in their credit score reports. The Act was updated by the Fair and Accurate Credit Transactions Act, FACTA, in 2003, giving consumers the right to obtain free credit reports and purchase credit scores. These regulations aim to ensure that the information provided by credit bureaus is accurate and provides consumers with the means to understand their creditworthiness. Here are 5 key takeaways. 1. A credit bureau collects and researches individual credit information and sells it to creditors for a fee, so they can make decisions about granting loans. 2. The top 3 credit bureaus in the U.S. are Experian, Equifax, and TransUnion, although there are several others as well. 3. Credit bureaus assign credit scores to individuals based on the credit history that they assemble. 4. Credit scores are important predictors of whether or not you will qualify for credit and on what terms. 5. Credit bureaus do not decide whether or not you will get credit. They merely collect and synthesize information regarding your credit risk and give it to lending institutions. Hope this would help. Thanks for watching.